Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host.
5 days a week, Monday through Friday, the only live real estate radio show that's 5 days a week live in the Bay Area. Growing fast, growing strong, and you can listen to us a couple different ways. One is on your radio at KDOW 1220 AM. You could also listen to us live online if you go to kdow.biz, and we've launched our podcast program, so be sure to sign up for those podcasts. You could go to 𝗟𝗓radiolive.com. That's 𝗟𝗓radiolive.com, and get those podcasts anywhere you go. If you have any questions during the show, a couple different ways you could reach us. One, the direct line to reach would be 408-387-5302, or the text line 408-838-9060. Most of you know the focus over the last 4 years for the show here is education and information. What we do is invite great guests on, like I have today, good content information. We work really hard as a team here at Real Estate Radio Live to bring you, the consumer, education and information to help you make wise decisions in your real estate. Pretty clear, pretty straightforward. That's what we try to do, and we'll continue to raise the bar on that as we move along. So with that, let me invite my guest here today, Tom Wheelwright, who's a CPA and CEO of ProVision. Let me just tell you a little bit about, before we get started here with Tom, author of Rich Dad Advisor to Robert Kiyosaki, which most of you know. Rich Dad, Poor Dad, extremely successful investor with many books and a lot of different stuff going on. Leading tax expert, wealth expert, published speaker, and a lot of information on tax-free wealth, and just the resume goes on and on. Several interviews with ABC Radio, amongst others, the real estate guys. A big resume to join the show today. Tom, welcome in.
Hey, thanks very much. Glad to be here.
Yeah, welcome in. This is going to be a fun show. I've been looking forward to this. Anybody that has the wealth of knowledge that you have and traveled the world, spoke with people, worked with the type of people you have in the area of expertise, that the fact that this is a real estate show, I'm excited to have you. So thanks again for spending some time with us today.
Oh, thank you. It's always great to be talking to real estate investors. Always.
Yeah. Well, maybe, Tom, let's get started, if you would, please, and share with our listeners a little bit about your background, where you started, and maybe just a couple of minutes to give us a taste and of what you've done and what you're doing now and the success that you've had.
Well, no, thank you. I don't often get to do that. I actually started my career, seems like 100 years ago. It was about 35 years ago with Ernst & Young, back when it was Ernst & Winnie. Including was in 3 different offices, one of them being the National Tax Office in Washington, D.C., and was there actually during our last big tax reform, 1985 to 1988, when the Tax Reform Act of 86 was passed. So that was a very interesting time back when Reagan was walking the streets of D.C., and then I came out here to Phoenix, actually joined the office out here at Ernst & Young. I also spent a number of years in-house tax advisor for Pinnacle West, which they hired me actually because they had just purchased a real estate development company. And that's my background, is real estate. So I went to work there, and then had a brief stint in Price Waterhouse. Didn't work out too well for either of us. You know it's not working out when they fire you after 7 months, right? So that was a pretty clear indication that it wasn't working out. And then started my own firm, started from scratch, had 2 clients, worked real hard, doubled it in only 9 months, so I had 4. And since then, we've built to an international firm. We have it's 20 years ago. So we have clients in all 50 states and 30 countries around the world, and get to travel the world a lot with Mr. Kiyosaki. Been on stage with Donald Trump, which is always fun. Met him a couple of times.
I'll bet.
He's an interesting guy. Actually, a very nice guy. Public persona notwithstanding.
Uh-huh.
And
I hear you.
Very, very, very smart guy. So interesting. It's been great. I mean, literally, I've been in Asia, Australia. Actually, I've not been to Africa yet, but I'm going to Namibia in April with Robert. So
wow.
I get to
Very
now
good.
hit the African continent. I'll be able to say that I have actually spoken on every continent, which is pretty cool.
Wow.
Except for Antarctica.
Well, congratulations. Yeah, that's quite a resume, and I can't wait to dive in a little bit and share with our listeners, all the wealth of knowledge and information that you share as you travel around with Robert and many others. And so why don't we, real quick, before we get started, if anybody wants more information, and we'll give this out periodically during the show and at the end as well, Tom, but it's tax-freewealthadvisor.com. Is that correct? Where if anybody wants more information about
tax-freewealthadvisor.com. Okay. Best way to reach us.
All right, yeah, tax-freewealthadvisor.com if you want more information, but we're going to dive in here and have a lot of fun. So tell us, let's get started, Tom. Tell us a little bit why you feel that as you go around and speak and work with some of these investors throughout the world and the country, tax laws and investing in real estate, why is that your opinion, is that the single best tax shelter?
Oh, no question. And around the world, by the way. It's not just the U.S.
Okay. Not just the U.S. Okay.
No, interestingly enough, the tax law is just a series of incentives. That's really all it is. There's one line says all income's taxable unless we say otherwise. There's about 29 pages of charts and tables tell you how much tax to pay. But really the rest of it, about 5,800 pages, is just a series of incentives for business owners and investors. And the incentives are heavily favored towards real estate investors in particular. So the government wants us to, build and own and manage real estate because I think they just don't want to be in the business. I'm sure they would be bad at it.
Yeah, no, I agree. That's very, very true. So how do you shelter cash flow using depreciation? Let's talk a little bit about that. We're going to take a break in a couple minutes and we could continue on the other side, but let's start and talk a little bit about that.
All right. So here's the thing. Every serious real estate investor knows that there are two things that make their real estate investments work. One is cash flow, and the other is debt. And these two actually combine to get us great tax benefits because what we end up with is cash flow that's non-taxable. And the reason, of course, is because even though we all know that while real estate will wear out eventually, it will not wear out as fast or as much as the IRS gives us credit for. And they give us credit through what we call depreciation, which is simply writing off the building and its contents and the surroundings, everything except the land itself, the raw land itself, we get to write off. And we get to write it off even though it's going to it may last 200 years, we still get to write it off.
Mm-hmm. Yeah, and that's one of the things I love about real estate, and you guys articulate it so well with, again, going around the world and the country talking about these opportunities, and you travel and you work with some of the greatest people to do with real estate and have a great background, is that truly the simple sense of this, and we're going to get into more detail, Tom, but you have the depreciation, you have this appreciating asset. You have someone literally, if we're talking about investment properties, the simplest way I always tell people is how wonderful would it be to have an appreciating asset that you have someone every month paying your mortgage payment and then some. I mean,
no kidding.
I know that's simplified, right?
Well, no, but on simple is good. But on top of that, think about this. So you put down $100,000 and the bank puts in $400,000. And you get your tax benefit not on $100,000, but you get all of the bank's tax benefit too. So you get to write off not just your money that you put in, but all of the bank's money they put in. So you're leveraging. So you're leveraging your cash flow because you've got somebody paying your mortgage, but you're also leveraging your tax benefits, which I think is just fantastic. Yeah,
no, it really is. Let's chat a little bit about like-kind exchanges, depreciation, debt to never pay. So let's talk a little bit about that before we take our first break, and then we'll continue after that.
Well, most real estate investors have heard this idea of a like-kind exchange, and it's there's some serious detail to it. But basically, the fundamentals of it are simply if you sell a piece of real estate that's an investment property, not your home, but an investment property or something that you use in your business, and then you, without taking possession of the money, you use a qualified intermediary, There's a specialist that handles this. And you go out and buy a different property. Doesn't matter what the property is. It could be, you could have an apartment building. You could then go buy raw land. You could have a chicken farm, and you could go buy an 𝗟𝗡𝗡𝗡𝗘𝗧. I mean, it doesn't matter what it is. There's no quality involved. There's no quantity involved. You can sell one property and buy 5 properties, sell 5 properties and buy 1 property. Doesn't matter. As long as it's investment for investment property, and you're not taking any cash out of the deal, okay?
Right.
So you've got to reinvest all of your proceeds. If you do it, you follow all the rules, it's not taxable. In other words, your sale becomes what we call tax-deferred. However, that tax deferral can be made permanent, okay? And all you have to do to make it permanent is to die holding it.
Yeah. So there's a way to hold in title, obviously.
Death is the ultimate tax shelter. Death is the ultimate tax shelter when it comes to real estate, because what happens is, so you're depreciating along. Of course, that reduces your basis, right? So you've got all this gain built up. If you sell it before you die, you're gonna and you take the cash out, and you know, in a taxable transaction, you're going to pay tax on all that gain. But on the other hand, if you hold it till you die, because of the way the estate tax works, you probably won't have an estate tax on top of that when your kids sell it the day after you die, because that's what's going to happen, right?
Yeah.
They're not going to have it. They're not going to have any gain. So you've turned what a lot of CPAs call a deferral, but you've made it permanent. So there's no reason actually to ever pay tax on either your cash flow or your capital gain if you're a serious investor.
Well, you heard it there. Okay, we're going to take a quick break. When we come back, again, if you have any questions or thoughts, there's a couple different ways you could reach us, 408-387-5302. For the entire hour, we have the expert, Tom. For the entire hour by phone here with Tom Wheelwright. He's CPA and CEO of Provision. He's an author, also Rich Dad advisor to Роберт Kiyosaki. Most of you know that, Rich Dad, Poor Dad. Many, many books, many seminars all around the world. Tom has traveled with Robert and several others to really talk about real estate and his expertise, the CPA, the tax background, really how to shelter tax, how to use the tax in many different ways in real estate. And there's a lot of good information. So we're going to continue this conversation. If you want more information about Tom and his company and what he does, you could go to tax-freewealthadvisor.com. That's tax-freewealthadvisor.com. Tom, let's jump back in here and talk a little bit about borrowing cash with tax-free loans. I know a lot of people, especially in this area, Tom, you know, in the Bay Area, we all know about housing prices, business is strong, it's very expensive to live here. I get investors calling me all the time on the radio show, email, voicemails saying, Joe, I want to become an investor. I really want to learn more how I can invest in real estate, but how do I do that in the Bay Area when the average price is $1 million and I have to put down 25%, et cetera, et cetera? So maybe you could talk a little bit about some opportunities and also the fact that you know, there's some tax-free loans out there if you really educate yourself and know what you're doing.
Well, I mean, first of all, remember that when you borrow money, that's not taxable because you have to pay it back. So it's not a taxable transaction to go out and borrow money. So the great thing about real estate is real estate's actually pretty easy to borrow money. The banks like to lend money on real estate. They've got a hard asset there. You've got tenants. If it's commercial real estate, you probably already have tenants in there. If it's a housing development, you probably already have tenants in there. Now, my son lives in Oakland, so he lives in the Bay Area, and so I know all about those those housing prices. But what's really cool to me in the Bay Area is you know, one of the keys to real estate I found that I've learned over the years is the smaller the unit and the more units you can get per you know, per acre or you know, per building, the better off you are, right? The higher, that's why hotels make more money than you know, than ranches do, right? They make more money per square foot. Well, what I love about the Bay Area is you guys were like the first area to do this en masse. is to take houses and split them up into, you know, you rent them out 5 times. You got 5 different unrelated people living in these houses. They've never met each other. You know, they've done no background checks on each other.
That's funny.
And yet here they are living together, sharing a single bathroom, by the way, a single bathroom. And I'm going, this is a great business. This is a great business. Yeah. Who wouldn't want to do this? I mean, even if the prices are high, I'm going, yeah, but you got 5 units in a little tiny house. So I would think the banks would be dying to lend money on that.
No, it's true. It's very creative. There's all kinds of things you could do with real estate. That's what's really so great about it. And we could go on and on about, you know, a place where we live in which the United States where, you know, you could act on these things and you could invest and you could be your own boss and your own entrepreneur. And, you know, we have to take a break in a minute or so here, Tom, but I'd like to get started. When I come back, I really want to talk about the partnership, you know, as you travel around with, for instance, Robert Kiyosaki, and then the strategies. You know, he's been doing this for so long. He wrote the first book and now several books. And I want to talk when we come back a little bit about, has anything changed, I guess, from a real estate investor's perspective? Do you just continue to gain more knowledge, or as you look back, some of the stuff that Robert and maybe you guys were sharing with audiences or people, you know, 4 or 5 years ago, is it different today? And, you know, are there any different opportunities maybe that people aren't aware of? And the other thing I want to ask you about and talk about when we come back to, Tom, is, you know, who do you trust? When you look on the Internet, you listen to radio shows like this, all these types of things, who do you trust when you're going to really spend some time and energy and resources in investing? So, all right, we're going to take another break. When we come back.
Question, by the way.
Yeah, yeah, and I know you're going to have the answer because you are the expert. So when we come back, we're going to have more with Tom Wheelwright. Remember, he is the CPA and CEO of Provision, expert discussing anything and everything real estate. Today we have a special guest on the line for the entire hour. Been kind enough to spend some time with a real busy guy. Tom Wheelwright is CPA and CEO of Provision. He's also an author and does a lot of work with most of the people you know, Robert Kiyosaki, Rich Dad, Poor Dad, many books written, investor seminars, also writes for Inman. I could go on. Tom's expertise is taxes and how you manage your taxes in such an investment, you know, exciting investment vehicle as real estate is. So, Tom, right before the last segment, a couple of questions I want to come back to, and if we could spend some time on. The first one is, you know, you guys have been doing this for many years. You've been traveling around with Robert Kiyosaki, and you guys have really put together some popular workshops, seminars to really help educate the consumer on investing in real estate and why there's so many great opportunities in that area. Has anything changed? What you guys have been talking about maybe, I don't know, 6-7 years ago, we had the big meltdown. We have all these different meltdowns every, you know, decade or 7 to 10 years. One's one's the tech bubble, then the real estate bubble. Has anything changed in what your strategies and what you guys are out talking about maybe 7 or 8 years ago versus to today, or is it pretty much the same principles?
I'll tell you, it's exactly the same. In fact, what I've learned, and of course I learned the hard way too, right? I learned real estate investing with everybody else, made the mistake.
Right.
And the big mistake I think a lot of people made in the first part of in the last decade was they invested for capital gain, not for cash flow. And Robert has always been consistent. It's about cash flow. An asset is something that puts money in your pocket. He's not talking about something that puts money in your pocket down the road. It's something that puts money in your pocket today. And that's an asset. A liability is something that takes money out of your pocket. And a lot of people mistakenly own an investment that they think is an asset. It may be an investment. They think it's an asset, but it's in fact a liability because it's taking money out of their pocket. So people buy, in Australia, they actually have a name for this. They call it negative gearing. And it means I'm going to buy a property that actually loses money. I'm going, why would you do that? It makes no sense whatsoever. It's all about the cash flow. And the key is, of course, with Robert, it's always been debt and taxes. So it's not about buying. If you buy real estate with cash, it's an okay investment. But you've got you're going to pay tax because you're not going to be able to leverage your tax benefits. So you're going to end up paying taxes on that money. And it's just, and you're not getting the kind of rate of return you get with debt. So it's this combination of debt and taxes to go along with the cash flow, but you have to have enough cash flow to easily cover your debt, to easily cover your repairs, to easily cover your maintenance. And I think that's where people get in trouble with real estate.
Yeah, no, it's a really good point. So so really nothing, it sounds like, according to Tom, what you're saying, Tom, and I would agree with you 100%, by the way. I wanted to get your thought, was that, the principles are the same. For the most part, tax things change a little bit, but the principles of real estate investing have always been the same. Unfortunately, there's ebbs and flows in everything we do, and the key is just to stick to those principles and your strategy and really get educated the best you can with the best people you can, like you, for sure. So we're going to take another break. When we come back, we're going to continue the conversation with Tom Wheelwright, CPA and CEO of Provision. And when we come back, we're going to talk a little bit about the line here for the entire hour. Just a couple segments left. Really a pleasure to spend some time with Tom Wheelwright, CPA and CEO of Provision. We had mentioned it before, travels around with Robert Kiyosaki. As most of you know, Rich Dad, Poor Dad, many, many books, seminars, and Robert travels with him and others and is a guest speaker on many radio, TV shows to really educate you, the consumer, as we do on our show on real estate, investing, tax advantages, and much, much more. Robert, what I'd like to spend a little time with now is who do you trust? And the reason I like to put this out is that, we're a show, we focus on helping consumers educate and inform, just as you guys do when you travel around. And there's so many different things out there. There's so many different models, come to this seminar for this amount of money, buy this for this amount of money, infomercials, websites, programs. There's so much information just coming at people 100 miles an hour. If I'm a consumer out there sitting today listening to this show, you certainly have an incredible background. You just go to your website. You know who you're affiliated with. Who should the consumer trust, or are there some things that they should be asking, researching, due diligence? How do they make sure they're really teaming up with the right people when they get some education on real estate?
Well, I really appreciate this question because I think it's perhaps the most important, really the most important question there is. Whenever you're putting your money, your heart, your soul into real estate, you're putting, and a lot of times you're putting your retirement, you're putting your dreams into this real estate, and there are a lot of charlatans out there. I mean, there really are. And I think that there are a couple of principles. First of all, I think obviously you can always look at who they are, what they've done, who they affiliate with. And I had a wise mentor years and years and years ago when I was a teenager say, Tom, be careful with whom you associate. And that was perhaps the most important advice I ever got. And when it comes to finding somebody that you're trusting, somebody that is advising you especially, I have a particular answer that is different than I think most, which is I don't think it matters what questions they can answer. I don't think what questions you ask are important. I think what's important is what questions they ask you, because I think that the individual investor has all of the solutions to all of their problems. They just don't know the questions to ask. And a really good advisor is going to ask the right questions. Somebody who cares about you more than they care about them.
Yeah, it's well said. I couldn't agree with you more. So in this, if we could, spin the globe, so to speak, and, as we sit here today, 2015, we're winding down. We're getting ready to roll into 2016. There's a talk. It's a global economy. We know that. This talk about interest rates, what's going on in China and overseas with the devaluation of the dollar. There's all these things going on. Do you see any different changes or approach in the expert that you are today, and you're educating people on a daily basis all around the world, Tom? If someone says, hey, Tom, I'm thinking about doing this, or should I invest in other states? Should I try to buy more units? Should I try to, a lot of people say, instead of taking that $500,000 and spending this, take that $500,000 and buy several different properties, or maybe even states, locations. What's kind of your overall view? Is anything changing in the next 4 to 5 years? What kind of advice would you be giving people on real estate in general if they're looking to invest today?
I actually give the same advice to anybody, whether they're in Germany or Australia or China or Russia, where I'm headed. I'm actually headed to the Ukraine next month. And that is that you really need to focus. You need to figure out what you're going to invest in and invest only in that. So, to me, the difference between a professional investor and an amateur investor is an amateur investor is going to make a new decision every time there's an investment opportunity. A professional investor makes a decision once and applies that decision over and over again. So if you look at somebody like Donald Trump, for example, very successful real estate investor, he does one thing. He does commercial real estate. That's it. You don't see him off doing apartment buildings. You don't see him off doing industrial space. You see him doing commercial buildings. He does high-end commercial buildings. My buddy Ken McElroy, who is another Rich Dad advisor, he does multifamily in Tier 2 cities, Class B properties. He only does one thing. And that's what makes somebody, I think, really good in whatever area they're in. I mean, I do tax. That's what I do, okay? And I think that when we're focused, that's when we make the better investments and really reduce our risk considerably.
Boy, that's a great answer. So what you're saying, and I'd love to, hopefully everybody's listening out there, whatever you decide to invest in, whether it's single family, multi-unit, commercial, 1031, tenants in common, there's all kinds of different things to do with real estate. You heard Tom, and I would agree. Figure out what a niche is maybe, or something you're really good at and you can get really good at and stay focused. I love that, because in business, in life, in investing, in whatever we do, isn't it true, Tom? I mean, if we have an appreciation and we enjoy what we're doing, number one, and then number two, we become experts or become really good at it, we have a better chance to succeed. I mean, that's what you're saying, right?
Oh, absolutely. And our risk is so much lower. I mean, think about this. If you were out on, let's say you were out racing, you were in a NASCAR race, who would who would have less risk, you or Danica Patrick? I mean, I would venture to say Danica Patrick has much less risk and much more chance of succeeding because she's done it more. She's more experienced. Right. She knows what she's doing. She has more education. And that's why, I love shows like yours, Joe, where people can get educated. It's all about the education. Education it reduces your risk, it increases your returns, and gives you control over your life, and of course, it reduces your taxes as well.
I love it. All right, we're going to take another break when we come back, and we're going to continue with Tom